Disclaimer.
Emergency alert. Silver just officially smashed through $90 on COMEX, and this is not a drill. The greatest squeeze in history is no longer coming. It's here, right now, and accelerating faster than anyone expected. Paper price, $90. Physical reality? Already $110, $140 in real markets. Dealers sold out, vaults draining, Asia premiums exploding. This is the point of no return. The banks can't stop it. The manipulation is dying. The physical drain is unstoppable. Before we dive into why $90 just unleashed the monster, let's hit the hottest comments from the last few videos. First, what would be a good gold and silver ratio to trade silver for gold? Is there an opposite ratio for exchanging gold for silver? Thanks. Smart question. Historically, the ratio has swung wildly. 15.1 in 1980, 100.1 in the lows. Right now, it's collapsing fast toward 50.1 and lower. A good trade zone for silver, gold is 50.1. You get more gold per silver ounce. Reverse, gold ain't silver, is strongest below 30.1. That's when silver is screaming undervalued. Watch closely. We're heading into that window fast. Second, China don't give a damn about the hidden buyer or buyers. They just want to get rid of all their US T-bills after seeing what happened to Russia. Period. You nailed it. China isn't playing defense anymore. They're dumping treasuries and locking strategic metals like silver inside their borders. This isn't about buyers. It's about control. They watched Russia get frozen. They won't let it happen to them. Silver stays home. The West gets whatever is left. Third, if COMEX closes or halts, it may as well stay closed. It will have become irrelevant. Exactly. COMEX is already becoming a sideshow. Physical is the real price now. Once delivery fails or halts happen, and they're getting closer every week, the paper price loses all meaning. It's not if anymore, it's when. The irrelevancy clock is ticking. Comment roundup done. Drop your silver questions below. I'm reading everything, and will answer as many as possible. Now let's get into the real story today. Silver hit $90, the squeeze is live, and the greatest wealth transfer in history is just beginning. January 14th, 2026. Silver just officially closed above $90 on COMEX for the first time in history. And this is not a drill. The greatest squeeze in precious metals is no longer coming. It's live, right now, and accelerating faster than anyone predicted. Current data tells the story loud and clear. COMEX spot closed at $90.12, a new all-time nominal high. Shanghai physical silver is already trading $95.98, the real benchmark now. Asia dealer premiums are $110 to $140 plus for immediate bars. Western dealers, SD Bullion, JM Bullion, Apimex, are mostly sold out. Pre-sale only, delays of weeks or months. Physical buyers are paying $105 or $130 in real markets, while paper pretends $90. This is not a premium. This is the paper price illusion shattering. $90 on COMEX is fiction. Cash settled, manipulated, never delivered. 110 to 140 I plus is reality. What actual buyers are paying for real metal that lands in their hands? Why the breakout now? China's export restriction, Zhuan 1, locked 60-70% of global refining capacity inside their borders. AI hyperscalers, Nvidia, Google, Amazon, Microsoft, are pulling physical bars at scale for data centers. Vaults are draining. Dealers can't refill fast enough. The $90 breakout is the point of no return. Technical levels broken. Psychological barrier smashed. Paper suppression failing. Physical demand taking over. The Fed leak rumors are swirling harder. Revaluation pressure. Bank exposure. Forced policy shifts toward hard assets. If even a whisper hits, physical demand will explode further. The $90 paper price is the last trap. It makes you think silver is catching up. It makes you hesitate. But try to buy right now. You can't at $90. Because the physical market is already priced at 110, 140 plus, and it's heading higher. The paper price is dying. The real price is rising. And the AI machine is unstoppable. The $90 breakout is the signal. The squeeze is loading. Physical holders who see this now are positioned for the biggest move yet. The illusion is cracking. The reality is taking over. The $90 trap is the last chance. The 110 plus is the new baseline. And the war is live. Silver closing above $90 on COMEX isn't just another high. It's the moment the entire suppression game officially lost control. This breakout is the psychological and technical kill shot that changes everything for the silver market moving forward. January 14th, 2026. Let's be crystal clear about what $90 really means. Psychological barrier shattered. $90 was the last major round number wall the shorts were defending. Every trader, every algo, every retail chart watcher had $90 circled as the, if we break this, it's over level. We just broke it. There's no next major psychological resistance until triple digits. The path is wide open. Technical confirmation. Daily chart shows clean breakout from multi-month consolidation. Volume spiked on the close, real conviction buying, not fake paper noise. RSI pushed into overbought, but with strong momentum divergence. Classic squeeze setup. MACD flipped bullish and accelerating. This is not a false break. This is confirmation. Paper suppression fails. The banks could hold $80. They could pin it at $85. But $90? That level required massive paper flooding and spoofing. And it still failed. The manipulation ceiling has cracked. Physical demand simply overpowered it. Physical market now leads. Shanghai already at $95, $98. Asia premiums $110 to $140 plus for immediate bars. Western dealers quoting 105 plus for anything deliverable, if they have it. The paper price is no longer the leader. Physical reality is dictating terms. Shorts in full retreat. JP Morgan's flip was the first domino. Other banks are now forced to cover or face delivery risk. Basis spreads are blowing out. Margin pressure is mounting. The cascade is starting. $90 changes everything because it proves the old rules are dead. Paper can no longer cap the move. Physical demand is too strong. Supply is too constrained. The AI drain is too relentless. China's lockdown is too permanent. This breakout is the point of no return. The war nobody is watching is now impossible to ignore. The victory is no longer distant. Physical holders who positioned before $90 are now sitting on rocket fuel. The paper empire is crumbling. The physical reality is taking over. The $90 breakout is the signal. The squeeze is loading. The triple-digit run is the result. The domination begins. The $90 level didn't just break. It changed the game. The banks are losing. The AI empire is winning. The physical holders are rising. The squeeze is live. And the greatest wealth transfer is just starting. Silver's paper price is no longer in charge. The physical market has taken over completely, and premiums are now the true price dictator as of January 14th, 2026. Here's what that actually looks like in real time. COMEX closed at 90.12, a headline number. But try buying physical silver at that price today. You can't. Dealers aren't quoting $90. They're quoting $110, well, $140 a plus for anything deliverable. And even then, most listings say sold out or pre-sale only. Asia is leading the charge. Shanghai physical transactions. $95, $98 base. Premiums pushing effective price to $110, $130. Dubai kilo bars, $115 plus floors immediate. India coin shops, $108, $125 with waiting lists. Western dealers are following. Popular 100 modern Oz bars, $20, $35 plus over spot for in-stock items. Smaller denominations, 1 Oz rounds Eagles, 8 to 15 plus premiums, if available at all. Many listings flagged back order, expected February, March. Why premiums now dictate the price? Physical availability is critically low. Vaults are drained. Dealer stock is depleted. New refining flow is choked by China's lockdown. Demand is inelastic and growing. AI hyperscalers need bars for servers. No pause, no substitute. Solar factories switched to high silver cells, locked in for years. EV production lines running at full capacity, 2-3x silver per vehicle. Defense and medical electronics, strategic, non-negotiable. These buyers don't wait for paper to catch up. They pay the premium or shut down lines. Supply response is structurally broken. 80% of silver is byproduct. Miners chase copper, zinc, gold economics. New primary mines take 7 to 12 years. China keeps 60-70% of refined silver home. The physical market can't wait for paper to adjust. It reprices itself. Now, the $90 COMEX close is becoming irrelevant. Physical premiums are the real price signal. When premiums hit 30, 50 plausers over spot, and they're heading there fast, paper becomes a sideshow. Buyers who need metal pay the premium. Paper traders chase the screen. The takeover is complete. Physical dictates. Paper follows or dies. The $90 breakout was the signal. The premium explosion is the confirmation. The bank's paper shorts are now facing a market that doesn't care about their positions. The squeeze is accelerating. The hidden war is live. The victory is coming. And physical holders who see this takeover right now are positioned for the biggest move yet. The war nobody's watching. The war that changes everything. The silver squeeze isn't future, it's now. And the physical market is unstoppable. The premiums are the signal. The 110 plus is the truth. The $90 paper is the lie. The war is here. The winners ride it. The $90 breakout didn't happen in a vacuum. It's being powered by an industrial engine that refuses to slow down, no matter how high the price climbs. AI, solar, EVs, and electronics are now the permanent, non-negotiable drivers, keeping silver demand locked in high gear. January 14th, 2026. Let's look at why this demand is different from anything we've seen before. AI infrastructure is the new black hole for silver. Hyperscalers aren't building a few data centers. They're building hundreds. each one a silver-intensive fortress of high-density computing. Silver is embedded in every critical component. High reliability interconnects, thermal interface layers, power delivery switches, accelerator modules. No other metal can handle the extreme current and heat without failing. Gold is too expensive at scale. Copper simply overheats and degrades. Silver is the only option that works. Goldman Sachs projects AI power demand up 165% by 2030. That's not linear growth, that's exponential. Each new cluster can easily consume thousands to tens of thousands of ounces. 5 major hyperscalers doing it simultaneously. We're talking millions of ounces per quarter, locked away forever in hardware that never returns to the market. Solar is the second unstoppable force. New high-efficiency cells, TOPCon, heterojunction, perovskite hybrids, are using 50% more silver paste per panel than older tech. Global installations are on track to exceed 600 gigawatts annually. Each gigawatt devours millions of ounces. Panels lock silver away for 25-30 years. Recycling is negligible, too costly, and low recovery rates. EVs continue to load up. Every electric vehicle uses 2-3 times more silver than gas cars, batteries, motors, charging ports, power electronics. Sales are exploding past 25 million units globally. Charging infrastructure alone adds millions more ounces. All 3 engines are running at full throttle simultaneously. Solar for green energy mandates, EVs for transportation electrification, AI for the next technological revolution. None of these sectors can pause. Competitive pressure is too high. Substitution is too risky or impossible. Demand is inelastic. Price doubles, they still buy. Demand is permanent. Once installed, silver stays locked in products for decades. Mining can't respond fast enough. 80% byproduct. New primary mines take 7 to 12 years. China keeps 60-70% of refined silver home. The industrial engine doesn't care about $90, $100, or $150. It needs the metal to function. It pays whatever the physical market demands. The $90 breakout was the signal. The industrial engine is the power. The paper price is no longer in control. The physical market is dictating terms. The bank's paper shorts are now facing a demand monster that won't stop. The hidden war is live. The victory is coming. And physical holders who see this engine right now are positioned for the biggest move yet. The war nobody is watching. The war that changes everything. The silver squeeze isn't future, it's now. And the industrial engine is unstoppable. The engine is the signal. The 110 plus is the truth. The $90 paper is the lie. The war is here. The winners ride it. The banks built an empire on paper silver shorts that looked invincible for a decade. But that empire is now exposed as fatally fragile, unable to survive the real delivery demands crashing down on them right now. January 14th, 2026. Let's look at why their position is no longer defensible. The core flaw, paper claims, or physical scarcity. Banks hold hundreds of millions of ounces equivalent in shorts, futures, options, swaps, leveraged derivatives. The assumption was always physical supply is infinite enough to cover any delivery or cash settlement. That assumption just died. Delivery pressure is no longer theoretical. AI hyperscalers are taking physical bars, not paper, not ETFs. Solar factories switched to high silver cells and are front-running. EV production lines are loading 2 to 3x more silver per vehicle. Defense and medical electronics are strategic and non-negotiable. These buyers stand for delivery. They don't cash settle. They need the metal in hand, or production stops. Registered stock is the breaking point. COMEX registered inventory is already critically low. Every bar pulled for real use drops registered further. When registered hits 0 or close, paper shorts face immediate delivery risk. Basis blowout is the first death knell. Basis, spot versus futures price. When physical is scarce, basis explodes. Banks short the front month can no longer roll cheaply. Cost to maintain shorts skyrockets. Margin calls become unavoidable. Exchanges raise margins on volatile moves. $90 breakout already triggered higher requirements. Banks leveraged 10x, 20 Hicks face calls they can't meet without liquidating. Forced covering is the kill shot. One bank cracks under margin or delivery pressure. They buy back futures to close. Buying drives price higher. Higher price triggers more margin calls on remaining shorts. Cascade begins. No escape routes left. Spoofing can't stop physical buyers. Flooding paper can't refill empty vaults. Cash settlement can't satisfy AI clusters or factories. Rolling shorts becomes prohibitively expensive. The bank's weakness is now fully exposed. No physical backstop. They never owned enough bars. Inelastic real demand. AI and industry won't wait or substitute. Supply choke. China lockdown removes the flow they counted on. Delivery risk. Real bars are required, not paper promises. The bank's only path is to cover at whatever price the physical market sets. That price isn't $90. It's whatever it takes to avoid catastrophe. The squeeze mechanics are locked in. The AI drain removes supply. The China lockdown prevents refill. The bank's shorts create forced demand. When supply is gone, demand becomes panic. The banks are trapped. The AI empire consumes. The physical holders rise. The squeeze is loading. Triple-digit silver isn't coming. It's the direct result of the bank's exposed weakness. The hidden war is here. The victory is coming. And physical holders who see this now ride the biggest transfer yet. The war nobody is watching. The war that changes everything. The silver squeeze isn't future. It's now. And the AI machine is unstoppable. The bank's weakness is exposed. The physical reality is winning. The vault drain is the battlefield. The delivery demands are the weapons. The shorts are the casualties. The holders are the victors. The bank's losing position is here. The domination begins. The $90 breakout and JP Morgan's flip aren't isolated events. They're the ignition that unleashes the greatest squeeze in silver history, dragging prices toward triple digits and beyond as exposed shorts, panic cover, and physical reality takes total control in 2026. January 14th, 2026. Here's the clear roadmap, phase by phase, now that the shorts are exposed and covering is inevitable. Phase 1, the forced covering wave, now February 2026. JP Morgan's long flip triggers immediate reassessment among other shorts, HSBC, Citi, etc. They see basis exploding and delivery risk spiking. Quiet covering accelerates. Not full panic yet, but enough to push price off $90 lows. Physical premiums keep widening, 110, 140 plus. Paper lags at $92, $98. Momentum shifts, decisively bullish. Phase 2, the cascade unleashed, March, May 2026. One mid-tier bank faces margin call or delivery failure. Forced covering hits, futures hard. Price gaps $30, $40 in days. $100 psychological level breached. Media finally wakes up. Silver squeeze confirmed. ETF inflows surge. Retail FOMO kicks in hard. Shorts who waited too long start piling in, accelerating the move. Phase 3, the full panic overshoot, mid-2026. Exposed shorts are in total retreat. Banks scramble to cover decades of leveraged positions. Physical demand stays relentless. AI clusters, solar ramps, EV production. Result, overshoot begins. No upper limit. Price runs to 150, 180, potentially 250 plus dollars in pure panic. Vault failures rumored. COMEX delivery chaos. January 14th, 2026. Silver just officially closed above $90 on COMEX for the first time in history. This is not a drill. This is not another fake out. This is the point of no return. Paper price, $90. Physical reality already, 110, 140 dollars in real markets. Dealers sold out. Vaults draining. Asia premiums exploding. The greatest squeeze in history is no longer coming. It's here, live and accelerating. The banks can't stop it. The manipulation is dying. The physical drain is unstoppable. Don't trust the paper price. Don't sell your physical. Hold the truth. Buy the breakout. You're not just stacking. You're positioning for the biggest wealth transfer in precious metals history. The war nobody's watching. The victory nobody sees coming. The squeeze is loading. Triple-digit silver isn't hope. It's the consequence. The AI machine keeps consuming. The banks keep bleeding. The physical holders keep rising. Position now. Or watch from the sidelines as $90 becomes the launchpad for the run that changes everything. The breakout is here. The winners ride it. The monster feeds. And you win. If you're ready, the banks are losing. The domination begins. I'm your name, Economy Record. If this exposed the $90 breakout and the greatest squeeze beginning, smash like, share with someone still trusting paper, subscribe and notifications on, because $90 is gone and triple-digit silver explodes now. Drop your questions below. I'm reading everything. We'll track every move as the squeeze unfolds. See you in triple digits.
Disclaimer.